Hi viewers, welcome to Scientific Investing, and in this video we will talk about a very interesting topic, Technofunda investing and how to ideate using Technofunda investing. So I get this query quite often that how do you generate ideas? And there is no single source of generating ideas. We generate ideas in multiple ways. So in this video, I'll deal with discuss how to generate ideas. What are some of the sources of idea generation? How do I ideate blending fundamental and technical? And sometimes how do I do a quick tactical technofunda to decide whether a company is worth researching or not? And how do I take the initial decision making of where to put effort, where not to put effort. So I'll take 3, 4 examples from the current market and I'll explain. And in the process, we will also look at the fundamental as well as charts of some 4, 5 interesting companies. So let us start. So one of my idea generation source is basically the tracking of the quarterly results. And we track some 1500 plus companies quarter after quarter, every quarter. Also, we have some technical systems through which we generate idea. And every quarter, when I look at these results, I look at which are the company which are doing well, which are the companies which were not doing well and they have started doing well, and what is the kind of starting valuation we are paying to it. Now, if I get into detail, what valuation metric to look, which not to look, all are very, very detailed topic. And in various webinars, workshop contents of ours, we have handled it. But for simplicity of this exercise, let us say EV/EBITDA is one of the metric we look at to start with. So here, just as a case study, nothing is a recommendation by yourselves, take it for educational purposes. Just as a case study, I have tried to pick some 5, 6 companies which have shown a double-digit sales growth rate and very good profit growth rate and available at less than 10 times EV/EBITDA. So these companies are NMDC, TGV Sraac, GHCL Textiles, Udumji Paper, Nitin Spinner, and Polyplex Corporation. Now we know at least these are the companies which have done well on the growth, whether it's cyclic growth, cyclic at the top growth, whether it's a growth, just start of growth journey, or they have been growing at last 4.45 quarters. I don't know. This is the starting point and this is my ideation. I know these companies have done well on the sales front. These companies have done well on the PAT front. And also these companies are available at less than 10 times EV/EBITDA. What is attractive, what is not, it is a matter of detailed research. But here, there's a starting guide. How did I generate this data? I track all the 1500 companies through our systems, which we have built over a period of time. And through this, we track. In fact, on my Twitter, we keep posting about all the interesting sectors, results. Even on our YouTube community page, we kept posting some of those threads. So hope you have gone through that and you have also started researching on some of those companies. So now I have a list of 5, 6 companies. Now, next, what I do is I also try to go and look at these charts. Are these charts good? Are these charts bad? And we try to look in TradingView, and we have built a lot of very interesting proprietary indicators in TradingView to get more information about these companies. So we have also built indicators to track these companies fundamentally in TradingView itself. So let us go through each of these charts to understand fundamentally the results are good, but technically how the charts are looking. So you can see the first chart is of Nitin Spinners, and you can see it's a very good chart. It's a chart close to 52-week high. And you can see this symbol M, which says this chart has come in Machayega multiple times. Now, again, Machayega is our proprietary indicator for price volume action. And when we get some stock in Machayega, we try to study that stock in depth. So this stock has come actually multiple number of times in Machayega in last 1 year. And from 220 when it came for the first time, 230. Current price is around 450. The other thing, you will see the fundamental analysis indicator on the right side. You can see the stock is also doing well, both in terms of sales and profit. And the sales growth rate has been good for last 5, 6 quarters. And slowly the profit growth rate has also picked up. If you are tracking textile sector, you'll know why the sales profit growth rate was less, why the margins were compressed. It's more a cyclic play. But right now, both the sales growth rate and profit growth rate are looking good for the company. The company is available around, 13.5 kind of P, and that is why the EV/EBITDA is less than 10. So it's a use case where the good results are there and the good results are continuing. The prices are good. The stock is making 52-week high. The stock is in trend. The stock is available. It's 13-week moving average. The stock is available. It's 20-day moving average. One more thing you will observe that so far the relative strength on a small cap index basis since July of 2023, the relative strength was not so strong. So though the stock has done well, it has not done relatively much better than the small cap index. But in last few weeks, the strength seems to be much better than how it used to be 1 year back. The third stock is Pudumji Paper, which is from paper industry. And you can see this stock did a breakout around 60 rupee level. And from 60, this stock has been 175 rupee. And this is not the first quarter of good result. It is the fourth quarter of good result. And the uptrend has been with very, very high volumes. So it's a continuation of good result for last 4 quarters. In fact, for the first time, when the stock came with great results and when that range breakout of 2021 to 2024 happened around 60 rupee, it might have been worth studying. So it's also a continuation of good result. See, I'm trying to connect fundamental and technical. So there are different type of chart patterns and there are different type of fundamental patterns. And actually many times they talk to each other. We think fundamental analysis is a different world, technical analysis is a different world. But having practiced Technofunda, my views many times they're connected. We just need to join the dots. And you can see there's a continuation of good result and there is a continuation of good chart. Versus this company Polyplex, which is into packaging, which is a super cyclic sector. You can see the fundamental results were very bad till December 23. In March gave the first sign of slight improvement and last 2 quarters have been good. The same thing is reflected in charts also. You can see from 2022 to 24, the company did very bad. And then the chart started improving from July, which was the first quarter of June quarter of very good result. Also, you can observe that this stock has been continuously in Ghumega, which was preceded by a Machayega with very good price volume action. So this is a signal of maybe possible this stock. And why I'm highlighting, because every nature of stock fundamentally and technically is different. And how we are going to do our research will depend on the direction of these signals. So this stock is different from a textile company stock, Nitin Spinner, where this company looks like it has created a cyclic bottom and it is trying to reverse from last 2 quarters. So this will be study of more what is the triggers for cyclicity. Is the cyclic turnaround sustainable? Are these margins sustainable? Is it going to further go into the same direction? This is what we are going to study. Versus another stock, NMDC, which has gone from almost a 90 rupee bottom in July 23 to it created a top of 280 and currently available at 229 rupee. Again, if you observe, this stock came in Machayega around 120 rupee. In fact, I had tweeted about it at that time. See, this is the use of using these kind of proprietary systems where it helps you to ideate. Now, what had happened, if you see currently the stock went through an intermediate correction, but when you look at fundamental results, it has not been that bad. I mean, except 1 quarter in between, the profit growth rate has been decent. It has been showing. So it's a company where the good results are there and there is a temporary pause or consolidation in chart and then looks like it is trying to reverse. Time will tell it will reverse or not depending on the result. But if the result continue, then there are chances that it might reverse from here. Let us see the next chart. The most interesting chart for me is this one, TGV Sraac. This is the first time I've been looking at this company and I'm trying to study this company. But what is interesting about this company, I will tell you, is when you look at the fundamental results, we had almost 6 quarters of bad results, 5 quarters of bad results from June 23 to June 24. In fact, the March 23 PBT of PAT was also minus 24%. We don't have September quarter, maybe because trading view has not captured the numbers, but I had already shown you the numbers. This was the first quarter after 6 bad quarters. And that is why you see the chart also from October 22, it kept on falling. And this is the typical rounding bottom chart where it is trying to create a rounding bottom base and it is trying to revive. And you can see for last 7-8 weeks, if you look at the candlesticks, You can see for last 6 weeks, the closing price has been above 13-week moving average. The 13-week we have moving average has been above 20-week moving average. So technically it is trying to reverse. This is the typical reversal sign. Still, it has not come in our Ghumega. Ideally, I would expect these companies to slowly come in Ghumega. However, you can see the chart is reversing, and after 6 quarters of bad result, we have first quarter of a good result. So this is where it starts with ideation. Either so this in this process, I started with a fundamental data of tracking result and then followed technical. I also follow a reverse where technically I will get some signals through my proprietary systems and then I will look at fundamentals. Now we have seen the initial trigger for fundamentally on the result. We have gone through the chart. We have some idea where a good growth company continues to do well, where it's a cyclic reversal trend, or where it's so many quarters of bad result is finally followed by 1 quarter of good result. Now what I have done for you, these are numbers, and how we generate these numbers. We have built a proprietary Excel analysis tool which is compatible with Screener, and on one click of button, we have so many, some 300 plus different metrics, some 100 plus charts to analyze companies. We have done workshops and webinars around it, where in 4-5 hours, we have gone through detailed case studies. So life is easy capturing all the interesting data. Now, if you see many of these companies, they belong to cyclic industry, they belong to commodity industry. So until and unless there is a growth or there is some trigger, some tailwind, it's difficult for these companies to have a positive momentum. So despite of good result, the key is to understand where they are in terms of their commodity cycle or cyclic nature, margin cycle, how much growth. So usually when I see these industry, the first thing I look at is the margins. Is the company at peak of its margin, or is the company at bottom of its margin? If the company is not at peak of margin, below the average margin, then the question will be to research in detail whether the chances of reversal are there, reversion to mean and all. So when we look at NMDC margin, the worst EBITDA margin is 35%, average EBITDA margin is 47%, and the current EBITDA margin is 35%. Also, I look at the cash flow quality, and this company has 62% operating cash flow conversion. Again, see, the detailed research is going to be very, very different. It's more about understanding the business, industry, con call. Here, tactically, I'm just trying to find whether there is a sense of either researching in detail, or it could be a good tactical trade opportunity, looking at a little bit of fundamental, looking at a little bit of numbers, charts, combining everything. And in our stock analysis tool itself, there is a way to do DCF valuation and all. So let me just walk you through the NMDC case study in detail. So again, this is one of the sheets from our stock analysis tool. There are some 20, 25, 15, 20 such sheets. What you can see is the stock is continuously every year throwing a lot of operating cash flows. And every year there is almost 2,000 crore of capex. There might be some other item or something one-off, because you are seeing that minus 60,000 number, 15,000 number, but approximately they're doing some 2,000 crore of capex. Just remember these data points in your mind. And the company is generating almost 1,300, generating decent amount of free cash flow, which is there. Now, so though the company has grown at around average 15% rate, 11% rate, and just to be very, very conservative, I assume. So see, my idea is not to do a detailed research right now. My idea is just to see if it is worth researching in detail. And to do that, I want to see if this is attractive enough to do that research. Now, I am aware that these are old gen companies. Many of these companies will remain low valued, all of that. I'm totally aware. My idea is to see if there is a chances of trigger tailwind and then play the trade based on chart or based on momentum. And I'm worried about only that amount of tactical research, and all of this gives me a kind of valuation comfort and all of that. So against a historic 11% growth, even if I take a 6% kind of 8%, 6% kind of growth rate, and the average PAT margin has been 35%. But when you look at the data of NMDC, you will realize the margins are continuously decreasing. Again, it's a matter of research to know why it is continuously decreasing. And this is where, if you can see this, You can see continuously the operating margin used to be 63%, then it has gone to 41%, then increased to 57%, further came down to 49 and 34, and now it's going in upward direction. So even though there is a cyclicity in margin in terms of trend, it is downward. And for any detailed research, it must be investigated that why the margins are falling. But let us assume that if this margin, and what I showed you is operating margin, now I'm talking, this is the PAT margin. It has to be investigated that why it is falling. But for the time being, for simplicity of calculation, if I assume the current worst margin, this is where company will stay and it will not rise or fall further. This is the cash flow which is getting generated. And then historically, you saw there is almost a 2000 crore of capex which is happening, which has done 11% growth rate. So for 6% growth rate, we may not need that amount of capex. In fact, lesser amount of capex will be required. But I'm assuming still, see, I am trying to build a lot of conservative picture, except this margin taking worst if it falls further, which remains the research. I'm considering everything worst, and I'm considering the same amount of capex, which is leaving me with this kind of free cash flow. When we apply this kind of free cash flow, there is almost a 60% kind of discount available, which means at least I'm not buying. It doesn't look like I mean, prima facie, it doesn't look like I'm buying some highly overvalued stuff. So in discount, I have two things, 50% OCF and discount at full capex. In 50% OCF, I am taking a simple assumption because how much of capex will go, these are areas of debate. It keeps changing depending on how business looks at growth and no growth. So in one case, I'm assuming, let us assume 50% of operating cash flow goes into capex. Then what is the discount I have? And then if company goes for full capex as per plan, what is the discount? And luckily in this case, if you see, the average capex has been lesser than 50%, and that is why the discount is higher. But even if you take a 50% of the OCF, still there is a 13% discount. Now let us look at the next one, and I am not going to cover all five. My idea is to give you a framework so that you can use the framework. And of course, some of the company, if I like, I will go and study them in detail. But for the time being, we will just stick to a quick tactical Technofunda. We will look at the next company, TVG Sraac. Now, when you look at TVG Sraac, first thing, the company has very good operating cash flow conversion. The company converts almost 78 to 83% of EBITDA into cash flow. The other thing, if you see, the company used to continuously work around 13 to 15% kind of EBITDA margin. And in fact, 1 or 2 years, it did around 23% EBITDA margin, which may not be sustainable. And then in last year, the company has done the worst EBITDA margin, which is 8.7%. This is the quarterly margin data chart of last 2-3 years, where you can see the margin has been falling, and it made a bottom at 3.8%, and now it is reversing and it is improving. So looks like, and you have already seen in results, 6 quarters the company had 8 quarters, 6 quarters the company had bad result, and now looks like this is the first sign of result tracking. This is a company where I would like to research in detail, whether it's a super cyclic company or what kind of company and how much margins can improve and what is the cycle. But it looks to me, if I have to study a company on cyclic reversal, this looks like an interesting company to study. And when I try to do a DCF valuation, so again, their historic average growth rate of sales has been 15%, and their average PAT margin is 5.2%. Their current PAT margin is 4.4%. So instead of this historic 15% growth rate, again, if I take the most conservative scenario of 6% sales growth rate, and not taking the average PAT margin, I'm not taking the peak margin, I'm not taking the average PAT margin of 5.2%. I give little more discount, and I consider, given they are cyclic and it's turning, I mean, given they are reversing and last few quarters were bad, if these kind of results can continue and if they can go little below the average PAT margin also, which is 5%, this is the kind of cash flow this company will generate. And here again, I have taken an assumption that what if 50% of, OPEX, 50% of operating cash flow gets realized in terms of free cash flow. Because see, against 15% growth rate, I'm considering only 6% growth rate. So we cannot consider the historic capex rate of 75%. It will be lower, and I'm considering a 50% growth rate. If we are considering 70% capex, we will have to go for a 15% growth. I'm just talking in terms of average normalized numbers. When we do that, this stock is available at a discount of 35% over current price. So this is how I'm trying to find something where there is a good result. There is either a momentum in chart or there is a reversal in chart. It's not a stage 4 chart. It's not an early stage 1 chart. But if we have to study the companies in detail, what is it we need to study? So first thing is the current margin structural or cyclical. Like in a NMDC, it might be in a structural downtrend. So my first question while doing NMDC research is why structurally there is a downward margin cycle, and whether it will go upward or not, or it will keep going downward. In a company like TVG Sraac, I will try to understand the nature of cyclicity and whether current cyclicity is the bottom cyclicity of the margin. What will lead to the reversion of margin and how much margin is possible? Can margin further fall from here in a NMDC, and how much the margin can go up in TV Sraac? What will be the trigger for growth? In fact, TV Sraac has done a lot of capex also. I just saw the brief overlook at the data. So it might be very, very interesting to study and do a detailed deep dive. But this is how I try to build my thesis in terms of how to generate ideas, how to start blending idea fundamentally, technically at level 1, how to look at my fundamental analysis tool at level 1, how to tactically find what is attractive, what is not attractive at level 1, how to find the right questions to study at a level 1, which I can go and study in detail when I do my level 2 analysis in terms of going through the company annual report or con call, and then do a peer analysis. So those things are much more detailed, granular analysis, but we can't research all the 2000 companies in one go. So there has to be a process and selection methodology around it. This is how I try to do for bets which are growing well, available at cheaper valuation, in industries which are cyclic or industries which are structurally not that great industry. And I know there is a reason why they are cheaply available, but depending on the valuation chart fundamental, if there is some trigger and some scope to make money and find some kind of cyclic reversal opportunities, this is one of the ways I try to do. So I just thought I will share my process. I hope this was useful. If you have more such companies, try to share. The 3 companies we still didn't do this exercise. Maybe you can do this exercise, and if you find something interesting, please share in the comment section. And if you like this video, please share with more and more people. One more thing, we are doing a 2-day extensive Technofunda workshop. We already finished it in Bangalore. The feedback was good. We are doing in Mumbai, we are doing in Delhi. And the Mumbai workshop is on 14th and 15th. If you want to register for the workshop, the link has been given in the description. You can go and register. And if you like our content, share with more and more people so that we can reach out to more people. And I will meet you in the next video. But before that, there are 2-3 topics which are there in my mind. Topic 1 is using ChatGPT in research. Topic 2 is how to look at algorithms in terms of backtesting, the basics of backtesting. Topic 3 is about a very unique special situation in a non-holdco where the cash on the books is almost as equal as market cap. If you want me to make a detailed analysis of this company, so do let me know which topics you find more interesting and I will make a video out of it. Thank you.